How are you now? Broadcasting from the studios of Sydney and Gadigal Country, it's the Theory of Thing podcast, Season 8, Episode 8. Remember, if it's talked about enough, it's a thing. Looking back on a week in which the market February some panic still sticking with it. Hold on, there's only 20% to come show. How are you now? It's James here, and you are listening to the Theory of Thing investment podcast. All advice is general in nature, all information is general in nature, whatever you want to do. I don't care. I'm joined here by Heath Moss of HLM Investments. We've gone ahead with a Thursday podcast. Hang on a second, Heath, before you jump ahead of yourself, because the market was off more than 1% overnight, and oh my God, hasn't everyone freaked out? Heath, how are you now?
Very good, and the sky is falling.
All right, it's just dun, dun, dun. I was trying to get a sound effect on my phone. It's just like markets in turmoil. Put it on the screen behind me. Watch out, everyone. Yeah, I know. It's happening. Anyway, nice and tight show today for us here. We're going to talk about markets in turmoil. We're going to talk about the Chairman's Lounge. We're going to talk about the US getting Fitch slapped. Very funny. Thank you, Ausbiz. We're going to talk about oil inventories and also oil inventories. That stupid RM Williams ball. We can talk more about that. Judo Bank, the PMI numbers just dropped about a minute ago, so we're going to talk about that real quick. And we're going to talk about some other stuff that you've got in there, labour market data as well. We can get through that. And then the footy tips. I've got some absolute crackers for you this week. Get amongst thanks for joining us here. Okay, go. Heath, you first.
Yep. I said to you guys yesterday, I feel the markets feel a little bit risk off now. That was before last night. I was just struggling to push ahead. And we got that deep, 1.5% sell off last night. And it was on really strong economic data. Those ADP jobs figures were really, really strong. Yields spiked, bonds got sold off, market came off. It was definitely a risk-off moment, and I don't know if you've got a screen up there for us to have a look at. But the SBX looks like it's going to come down to about 4,450. And if it can't hold that, it would be around the 4,200, which I think would be the absolute low, and I'd be a very keen buy there. But very quiet week macro and earnings-wise in the US and even here in Australia. So not much direction there.
Well, I mean, if you look at that, so I'm pulling some quotes out of the FT. They're talking to this fellow called Maley. I don't know where he was, chief market strategist at Miller Tabak and Co. Quote: That's the news that causes yields to move higher. Or he was talking about the jobs numbers. It raises the odds that rates will remain higher for longer, even if the Fed stops raising rates soon. Hey, chuck some moving averages on that, Heath, while you're there. I want to see a 20 and a 50-day moving average.
Now you're asking
me.
You've
got seconds time under the gun here. When the 10-year yield, when the 10-year yield was above 4%, this is the thing that really that resonates with me. When the 10-year yield was above 4% back last year, the stock market was 20% lower. So
I've got the 9 and 21 up. Got a 9 and 21 up.
9 and 21. I said a 20.
That's on. The yield. I'll put it back on the SBX. There we go.
Just making stuff up now. You just okay. Yeah. 20-day and a 50-day moving average on that.
No, 9-day and 20-day.
Can you do what I ask you, please? Or you just want to just go rogue over there, pal? That's all right.
I do.
Don't forget who's got the subscription. Don't forget who's.
I'm getting up. Right. Yes, there we go. The green line is the green line here is the 50-day.
Mate, it's still miles away from the 50. It's only just touched the 20, I thought, but from what I'd seen.
Yeah.
Depending on where you shake it, so it's not super panicky. I'm okay with it. It's so what he says. He continues the quote. Says, it was 20% lower last year when yields were at 4. Yes. Therefore, it's going to be very tough for this expensive stock market to keep rallying in the same way that it's done so far this year. If you have that same sort of where yields are, where the market is, everything like that, it's jumped 20%, and there's been no real reduction in yields. It's just that expectation of it. So it's gone in spite of that higher hurdle rate that you've got for everything, and the higher cost of funds, and the higher all of these things that it is, the cost of debt and how much you repay, and all those things that have to happen. It's just got to catch up. The trading advice, the general advice that I would give right now is going to be, first off, last month was one of my better performing months of my entire career, because I had sort of everyone in just a buy and hold sort of situation, a do nothing thing. It was a sensational thing and a great farewell to my time here running an MDA at VFS. just before I go to Shaw's. It's going to be quite advantageous for me to go to Shaw and stockbroking with the market being off a little bit. Give me some really good buying entries for people that are going in there. So fingers crossed. But, I'd rather it went up. The other one that I'm talking about is the flight to quality. This is why I'm unhedged. The flight to the US dollars just got snapped up. Very much Aussie dollar as a risk currency. Really proved that it is that in that particular case as well. Is that the DXY or is that the US Aussie?
That's the Dixie. You see, it's heading towards that resistance there, that downtrend resistance.
She's
it's above the 50 as of last night.
Amazingly, so watching out for the fact that Fitch got Fitch slapped. I love that expression. Went to AAA plus down to a AA plus. It was mentioned that, and I don't know the quant of this, but there are bond funds that have to have, if you've got that ultra high quality rating that you need to have in your holdings, all of a sudden that now you have to dispose of US government debt backed by the US Navy, which is why it's sort of like, well, and also their entire, it's the biggest economy in the world and everything like that. US debt isn't really a situation, but if you're holding those bonds, then theoretically your mandate says you start to dispose of them if you've got that ultra high one. I don't know the quant on that. If someone could tell me, please tell me. That's why I need Marty Wetton on call for that one. All right, what else have we got going? How far into this? We're 6 minutes in. We've got 10 minutes go.
Okay, beautiful. Let's talk about the Australian market just very quickly.
While you're pulling that up, I'm just going to give you the headlines out of the services numbers that just dropped. S&P Global Judo Bank Financial Final Services PMI for July 2023. Services is 47.9, tumbling into contraction from 50.3 in June.
Yep.
Third monthly fall, if you're German, in the services activity index. Biggest monthly fall since the start of the RBA's tightening cycle in May 2022, which they held off because of the election, Heath. Composite is 48.2 in July, down from 50.1 in June. Composite is the lowest level since December 2022. Heath, Aussie market, go.
Yeah, well, those numbers just say what we've been saying for a few months now is, those rate hikes eventually going to hit household budgets. And, that core inflation is going to become less sticky because, services is what really holding it up. And I know travel and accommodation and all those sort of prices are coming down.
Right.
So, yeah, and we've seen the Australian market mainly follow the US, as you can see there on the chart there. But we also saw really weak China PMIs to start the week, and they still haven't dropped any real stimulus plans or notes or anything of the like. So we're sort of squandering here a little bit. I think this is a bit of support, and if we can't hold this, we could head to 300 points lower.
So if it doesn't stay where it is, then it's going to go lower. And if it does stay where it is, it's going to go higher. But it might also go lower. It may also go sideways. The market can go in three directions from here, Heath.
Pick one of three. We do have earnings starting. The bulk of earnings starting next week with Commonwealth Bank, Suncorp, QBE, etc. shoved in there as well. So the real stuff starts next week. We've had a few smaller earnings come out, but nothing of major note apart from Rio. So that's what the market will be focused on, especially with CBA. And they'll be looking at those provisions, whether they increase some provisions or liabilities there, and their arrears, how they're tracking as well with the fixed mortgage rate rollovers over the last 6 months.
The first page I'm going to go to, and Pete Wargent is always amazing at pulling this up, is going and checking the 90-day arrears. That's 90-day, 30-day, whatever it is.
90-day.
You know me. I'm an arrears man, and always have been. The Rear Admiral at your service one more time. So what else we got here? So according to the Property Council of Australia, this just dropped by CommSec. I wish I could just drop that into the... Anyway, according to the Property Council of Australia, the national CBD office vacancy rate rose to 12.8% in the first half of 2023 to levels not seen since the 1990s. God, that was a good time to be alive, wasn't it? Fantastic. Here, I'm going to try and chuck this. I'm going to screen share.
Go for it.
Screen share our little prep doc that we've got. Boom. Shared. Look at that.
Beautiful.
That's technology. Okay. All this is for people who are listening is just a chart showing that there's a massive downturn in office vacancies. We tried to tell them. Colgo shot back on this one on the chat. We told him, we spent so long as the VIP show just saying, guys, it's cactus. I cannot be any more bearish for now on vacant on commercial real estate.
Property. Yeah, and it's not as bad.
Yeah.
It's not as bad here as it is in the US, especially in the likes of New York, where it's only their office space is only 50% occupied, and same with Silicon Valley. But and our banks really don't have that exposure, that huge exposure that the regional banks over there do. So it's not as dire over there, but there's going to be some pain, especially I think in the retail space, the shopping centres, suburban shopping centres. If you're not in one of those big main hubs, then you're going to struggle. You're going to see tenants fall out, and those landlords are really going to struggle for the next 18 months, I think.
Yeah, I wouldn't be in one of those ones at all. And amazingly, we do actually have some shopping centre exposure directly through Fairfield. So Illinois has a half decent product in some of this stuff. Pick and choose as you go. But then, I mean, we went into one of these shopping centres, and then COVID hit, and you're like, oh, and then they managed to keep the dividend all the way through COVID because they were getting paid, and they were a distribution centre. They got a Woolies in there, and now sort of post COVID, it's not looking so good. So, I mean, we're still sitting on this thing. You've got to bag hold it. That's just how it goes. What else we got that's on Le Boyle?
That's about it. Lithium was a little bit hot this week with Alabama taking a position in Patriot Battery Metals after they announced a massive 109 million tonnes at 1.4%. I think Alabama drop their Liontown takeover, move over to Patriot Battery Metals, get the same size resource basically for half the price. And then I think something like a Winston Resources, WR1, will be the next target of one of the majors out there, probably international, looking for hard rock here in Australia or Canada.
Hello to some of my self-directed clients who own that particular stock that you mentioned. So it's not advised to
same here. Lots of clients that own that. Yep.
I should probably get some myself, but now that we've just talked about on this podcast, I don't think I really want to draw that sort of attention to myself. I am going to show something here, which is account on my Instagram feed, and this is on the back of that stupid football, that the RM Williams rugby ball that was $999 last week. Get your hands on a Tiffany & Co. basketball. It is a green basketball with Tiffany & Co. written on it. Only 100 available, and I didn't even click it to find out how much they were going to be charging.
$5,000, something like that, probably.
Amazing. I don't understand what I've been doing to deserve that sort of targeted marketing, but there you go. Oh, name for me the countries. Here's a trivia for you, Heath. How many countries have got a AAA rating now?
9, I think it is.
Yeah, more or less. Right. Germany, Denmark, Netherlands, Sweden, Norway, Switzerland, Luxembourg, Singapore, and the retainers of the Ashes, the greatest country in the world. And I'm so proud. Chairman's Lounge. Now, mate, have you ever been into the Chairman's Lounge?
No, I don't believe I have, no.
Do you want to?
Oh, eventually one day.
Well, you can't. Anyway, so look, there's this big scandal at the moment. Should politicians have access to Chairman's Lounge, based on the fact that they're like a huge government contractor, effectively, and it's a conflict of interest, and that members of Parliament should be out, at least in a lounge. That's fine, but not in this little tucked away thing with only other 30 people there. Be out, press the flash, be seen. Don't get hidden away. Now, let me tell you a little story. Let me tell you a little secret story about this one. So, David Leyonhjelm was the Liberal Democrats' federal senator. He did manage to get through there. The first piece of mail, and it was friends of ours. Anyway, long story on this one, but the first piece of mail, it was funny sort of seeing a guy get elected to the Senate and just go, okay, the first piece of mail that sits on your desk when you arrive at your office is from Qantas, from Alan Joyce. This is your membership to the Chairman's Lounge. First piece of mail that you get. This is your, whatever it is that's there. David Leyonhjelm just looked at, opened it up, tore it up, put it straight in the bin. Incredible to do that. This is the sort of access that people dream of getting. Okay, it's like a full exclusive thing. You're in there, you can talk to anyone you want to talk to and do whatever you want to do. It's fantastic. And tore it up, threw it out. Extraordinary. Mum was ropeable because she's always wanted to have that sort of access on the whole thing, but it didn't. Now it's starting to look like that sort of integrity. We need to see more of that across. Say what you will about David, but there you go. All right, footy tips. Oh, also, oil inventories were off massively, very bullish for oil. Yeah. I'm still very happy holding oil on the way through there.
Wasn't it 15 million barrels or something along those lines? It was huge.
Like it was huge. Yeah. It was a big draw.
Yeah, and we've seen oil up about 4 weeks in a row, so it's looking good. Running into that,
Fantastic.
Hopefully China stimulus by the end of the year. Footy tips.
I'm going to start with my. I'm going to start with my
for
footy tip. I'm just going to go Manly. Take Manly with the points. Now I'm going to Shores. I have to support Manly. It's not necessary, but I suppose it is. Manly with the points, 4.5 into the Warriors on Friday night. The Warriors will win as well. Doesn't matter what it's paid. It's a guarantee. It's a lock. What have you got?
We were both winners last week, I think, weren't we? Mighty Crows got up over Port. Got a Battle of the Bridge special for you this week, considering it's Sydney's version of the showdown. I've got GWS at the line, which is -3.5, paying 190. I think they'll win by more than that. They've won like 7 or 8 games in a row. Looking great, looking like a top 4 team.
Yeah, I know that.
And so I think they'll win that.
Swans without Buddy is a very strong force, though.
yeah, they are. But I think GWS are just in much better form, more mature midfield, etc. So,
okay.
Taking them at the line at -3.5.
All right. Well, there you go. So we've got GWS against this to beat the spread. We've got the Warriors tomorrow night, and we've got Manly they'll need 4.5 against the Roosters tonight at the SCG. Getting quick. That's the show, mate. That's the Box and Dice. Congratulations, everyone, for joining. Heath, short and sharp. Let's do more of this sort of thing, mate. I'll talk to you later on.
Sounds great. Have a good one.
Mark well.